Carrie, what do you think? Jim Cramer have it right? Is this falling off of Wall Street's wall of worry?
Hi, Frank. Well, it seems to be of less concern to Wall Street than we might have expected. I mean, if we do default on our debt, that's definitely not going to be good. But the market has continued to go up. It's up 9.5% this year. What we would say is that the market is not always correct in its assessment. If we get to a week from now and we still don't have an agreement, of course that's a risk. And so therefore you can't just dismiss it. You really have to take seriously that there is some percent chance that we won't reach an agreement.
What do you make of the 1-month T-bill right now at 5.88? It's at a record high. What does that say to you about investor sentiment and confidence, at least on Wall Street, that this deal is going to get done in a timely manner?
Well, for that 1 year to trade at a high rate, that high rate is really amazing. I mean, people, first of all, should take advantage of it if they have an opportunity, because I'm not sure we're going to see 5.8% for long. I think that we're having this mismatch, as Jim alluded to. You know, there are concerns that's driving up treasuries. I mean, who knows where the treasury rate would go if there was really a default. So, you know, I think these moves in the near term, a lot of volatility, are really signaling very short-term distress concerns, then some sort of a relief rally in the bond market. But we'll see what happens in a week.
All right. So obviously you have a lot of clients who are talking to you about everything that's going on. What are you advising when it comes to portfolio protection? Is there something that investors can do or at least keep in mind to protect their portfolios?
Yeah, sure. We think so. So we have not done anything so dramatic as to raise, tons of cash because we're concerned that the market's going to have a dramatic decline. I mean, that's beyond where we're considering. And there always is a resolution. It's just about timing. What we decided to do is take some money off the table from stocks that had either had strong runs up. We trimmed a number of names. And we also decided that there are some stocks that have big exposures to government contracting, and perhaps we should scale those back. So on this, and then add some names where there was more protection, more defensiveness, less concern about being paid by the government. So, for example, we trimmed some holdings in Booz Allen Hamilton. It's a large defense contractor. It's been a very good stock over the years, and that was when we decided we should have less exposure to. Also, Wabtec, which makes freight cars and light rail. And while they're not necessarily paid by the federal government, there's a lot of government money that goes to them. Been a good stock, and so we trimmed that name. We added to Nextera, Charter Communications, for example, and we felt that those, again, were very inexpensive names on the charter side. Nextera, it's a utility. I mean, they're going to get paid. We like their exposure to sustainable energy. And we also added a little more TMO, Thermo Fisher, because that has been a stock that was great in COVID, and then it's come back down, and we like the price here.
You know, Carrie, important to note, the NASDAQ just turned negative just a few minutes ago, so all the futures in the red right now. But I want to talk to you about just the breadth of the market run-up that we've seen. It's just been a few stocks. A lot of people pointing to Microsoft, Alphabet, NVIDIA really being the drivers. Apple's in that group as well. A lot of index investors watch this show, a lot of index investors, period. Are you concerned that it's only those few stocks at the top moving the market higher?
Yeah, exactly. Of course, that's a concern. If 80% of the market gains this year can be attributed to 10 names, that's too narrow. That other 490-plus names that haven't done much, they trade at 14 times earnings. And the word that we've used is reemergence, because if we are able to solve this debt ceiling problem and we are avoiding a recession, or we have so far, maybe we'll see a reemergence of the rest of the market, because it's trading at a very reasonable multiple. And we need more breadth in order for the market to sustain this advance higher. Definitely.